What's up, everybody? Welcome to the Forex course for Elite Signals. This course will teach you everything you need to know about trading Forex and how to become a profitable trader, everything from A to Z. So if you're excited and you want to start learning how to trade Forex, let's get into the video. All right, guys, welcome to the course. Let's get started. So what will you learn in this course, guys? You'll learn everything from currency, so what the Forex market is. You're going to learn exactly what trading psychology is. You're going to learn Forex trading, so lots, pips, leverage, shorting, brokers, different trading platforms, and indicators. You're going to learn all that stuff. You're also going to learn about risk management, which is extremely important, and a lot of people overlook it, but it actually accounts for about 70% of your trading, so it's very important to learn. And you'll also see me doing some live trades, so you're going to understand exactly what I do and copy that and put it into your own trading so you guys can be one step closer into becoming profitable. So before we get started with the course, I have some expectations that I require from you guys. I need you guys to understand all the concepts that I talk about in this video. So if you guys don't understand it, make sure you guys watch it again and again until you grasp the idea that I'm about to teach you, okay? Ask yourself, why are you trying to learn Forex, right? Do you have a specific financial goal that you're trying to hit? Are you just trying to quit your 9-to-5 job and trade Forex instead? Just ask yourself why you want to be trading Forex and use that as motivation to watch this video and actually exercise everything that I tell you and do it yourself. Do the work, guys. It's very important that after this course, once I teach you everything I know about Forex trading, to actually apply the concepts that I'm giving you into real life. It's one thing to watch a course, but if you guys don't do anything about it, then you're really just watching this for no reason, right? So make sure that you actually use the stuff that I teach you in this course when it comes to trading Forex. And most important, guys, practice, practice, practice. There's no such thing as too much practice. You need to be always practicing when it comes to this game. It's just like you're playing a professional sport. As soon as you stop practicing, your skill level is going to go down. So this is very, very important that you guys do and follow. All right, guys, lesson number 1 when it comes to trading Forex is you guys need to understand what currency pairs are, because that's exactly what you trade in Forex. So what is a currency pair? A currency pair is very simple. It's when you quote one currency against another currency. So for example, right here we have USD CAD, which means that the base currency, the first currency, is the US dollar, and the second currency, the quote currency, is the Canadian dollar in this example. Okay, so let's take a deeper example about currency pairs. So over here we have the currency pair USD CAD equals 135. So what does that mean? That means for every single $1 American, you can get $1.35 Canadian if you exchange it, right? There are other major currencies when you trade Forex. These are the major ones down here. So you got the euro, the Great British pound, the Australian dollar, Japanese yen, New Zealand dollar, and then the Swiss franc. Those are the major currencies that people trade all the time. Now, there's also major currency pairs. These are what people are trading as pairs every single time. And these are the ones that I want you guys to focus on when you're trading, especially as a beginner, because these are the ones that are most traded, and these ones are going to have the most volume, which we'll talk about later in the course. So the Great British pound versus US dollar versus Canadian dollar, AUD USD, USD CHF, USD JPY, Euro USD, NZD USD, and then Euro Great British pound. So you guys can take a screenshot of that, and I'll teach you guys how to add them to your chart later in the video. Okay, so now that we understand what the major Forex currency pairs are, let's move on to price terminology. So price terminology, these are key terminology that you're going to be using when it comes to trading Forex, and you're going to use it every single day. That is the spot price, the order book, bid price, ask price, and the spread. First, let's go over what the spot price is. It's very simple. The spot price is basically just the current price of the Forex pair. So for example, over here, if we bring the chart into the slideshow, we can see that we're looking at the New Zealand US dollar, and that the current price for this right now is 0.62776, right? That's pretty much all that the spot is just the current price of the Forex pair that you're looking at. Okay, so now order book. An order book is basically just a list that shows you all the buy orders and sell orders that are currently open. And it would look something very similar to this inside your broker's app or whatever you're using to trade, which we'll talk about later on in the course. Okay, so now let's start talking about the bid price. The bid price is very simple. It is the price that you can currently sell at. So if you bought a currency pair and you're looking to sell it, then you can sell it at the bid price. Now the ask is the complete opposite of that, and that is the price that you can buy at right now. So if you're looking to buy into a Forex pair, to make money, then you would be buying at the ask price. And the spread is very simple as well. It is just the difference between the bid and the ask. So for example, if the bid was 1 and the ask was 3, then the spread would be 2. Okay, now let's talk about pips. A pip is actually very important when it comes to Forex because that's the calculation that you're going to use to understand exactly how much money you're making when trading Forex. So what is a pip? A pip is the number after the 4th decimal point of the price. So for example, right here, we see we have 0.0001. That 1 is considered the pip. Now, if this were to move up to a 2, then that means the price went up 1 pip. So over here on the slideshow where we have the example, we see that the pip is labeled in green, meaning that if this number were to change to 1, that means that we went up 1 pip. And if we were to go down 1 to a 6, that means you went down 1 pip. Now, typically when you're trading, you're looking to make pips, and that's exactly how you can make money trading Forex. Next one we need to understand, guys, is the pipette, and that is the number after the pip, so to the 5th decimal point. And we don't really use that much in Forex, but it's nice to know exactly what it is. So right after the pip is the pipette, so we can just know exactly what that is. And then a point is basically just a minimum change. So for example, if the pipette were to go up from 3 to a 4, that would be a 1 point change. Okay, so now let's talk about lots. What exactly is a lot? A lot is what you're going to be using when you're trading Forex. So for example, a standard lot is the equivalent of trading $100,000. So one standard lot is the equivalent of putting in $100,000 in the market and trading with that. A mini lot is 10,000 and a micro lot is 1,000. So when you're trading with your broker, which we'll get to very soon, you're going to be asked exactly how many lots you want to enter in the position. And depending on your account size, you're going to be picking one of these numbers using something like a position size calculator, which we'll go over again in the course. But for now, this is exactly what a lot is. Now, next slideshow, guys, is leverage. Leverage is very important. You cannot trade Forex without leverage, okay? Leverage is given to you by your broker, and that can be anywhere from 1 to 50 to 1 to 1,000. So for example, if you're depositing $100, you can get up to $100,000 to trade, but that's very high risk, right? So you can win with the amount of $100,000, or you can lose with the amount of $100,000. So just because brokers offer you more leverage doesn't necessarily mean it's better for you. It just depends on your account size and what your risk tolerance is when trading Forex. So here's an example of the leverage options you can get when trading Forex. You can go all the way from 1 to 1 to 1,000 to 1, and your margin requirement tells you exactly how much you need in order to trade that depending on your leverage. So if you're looking to trade $100,000 in Forex and you have a 1-to-1 leverage with your broker, that means you have to put down 100% of that 100,000. But if your leverage is 1,000 to 1, that means you only have to put up 0.1% of $100,000, which is only $100, to be able to trade with $100,000 in the Forex market. So again, the higher leverage, the more risk there is when trading Forex, but also the more money you can make when trading Forex. Okay, so let's move on to short selling. Now, a bunch of you guys probably don't know this, but you can also make money predicting the market is going to go down and not just up. And that's what short selling is. So by definition, it's the sale of an asset that the seller does not own. The seller effects such a sale by borrowing from the asset. The asset is the broker at this given time. So for example, if we were to bring in this chart right here, and we were predicting that the market is going to fall when we got this sell signal on the algo, then we could have made a lot of money with this trade right here, predicting the price going down. Okay, so now that we understand that you can short sell a market and make money going downwards, now let's talk about how you actually make money and enter trades in Forex. And in order to do that, you need a broker. What exactly is a broker? A broker is an entity that facilitates execution of orders. So for example, whenever you want to buy something, you're going to go to a broker and they're going to buy it for you. Or if you want to sell something, you're going to go to a broker and they're going to sell it for you. That's how it works in the Forex market. Now, before you sign up with a broker to start trading Forex, you need to know exactly what to look for in a broker, right? So right now on the slideshow, we can see exactly what we want to look for. We want to look for a regulated broker, and that is a broker that has a lot of oversight and regulations that they have to follow in order to meet those oversights, right? So those type of brokers are going to be very safe to actually put your money with and execute your trades. Instead, you don't want to be using unregulated brokers those are brokers that have no oversight and no regulations. So they're very sketchy, and sometimes they go down, which means that you lost your money if you put your money with them, right? You want a broker that's very transparent with you, right? You want a broker that tells you exactly what's going on all the time. And you want a broker that has very low fees. So the lower the fees, the better. Avoid brokers with high fees as they diminish your returns, right? So the less fees, the more money you make trading Forex. And you also want a good platform that the broker uses in order to place your trades. A lot of them are using stuff like MT4 or MT5, which is great, but some of them have their own platforms that suck. So you actually have to look into that as well. And one of the most important things is obviously support, right? You want a broker that has good support. So anytime you have a problem with your account, you want to be able to give them a call or an email and they'll answer you right away. This is very important when finding a broker. So here's a list of recommended brokers that I recommend. Regulated ones, you want to look for Owanda, Forex.com, or IC Markets. Those are really good regulated brokers. But if you want to use unregulated brokers, because sometimes they do give you some advantages, like if you're in the States and you want to trade gold, for example, you need to be using an unregulated broker. So you can use ones like these ones here, Hugo's Way, Trader's Way, and Athens Market. These are unregulated brokers that have a lot of members with them, so they're not as sketchy as other ones. Now, every single broker that we recommended will have real and demo accounts, right? A real account is when you're using your actual money. So you take your money and you deposit it into the broker, and then you're using that money to trade Forex with, right? Or what you can do if you're a beginner trader or you're testing out a new strategy is you can use a demo account. So a demo account is basically like trading with real money, but the money is completely fake. It's not yours, right? So you're trading the real market with fake money. That way you can learn how to trade and not risk your real money while you're learning how to trade. This is something I recommend to every single new trader and trader looking to test new strategies, is to always use a demo account first. Make sure you build that practice, make sure you build that skill and knowledge and get really, really comfortable trading Forex before you start using a real account. Okay, so now that we understand the difference between a demo account and a real account, it's time to talk about analysis and the two different ways to do analysis to determine when to buy and sell in the Forex market so you guys can make money trading Forex. Now, there's two different types of analysis. There's technical and then fundamental analysis. Technical analysis is when you're using a chart. So something like this right here, guys, where you're using a chart that looks like this to make your decisions in the market using either volume, you're using indicators like Elite Algo that tells you when to buy and sell. You're using different things on the chart to tell you when to buy and sell. That's considered technical analysis. Now, fundamental analysis is anything else. So for example, politics, trade deficits, interest rates, employment, GDP, countries printing too much money, anything that happens that's not on a chart is considered fundamental analysis. So let's move on to the next lesson, which is technical analysis. I'm going to teach you guys everything you need to know about technical analysis before we get into the fundamentals. Okay, so let's talk about technical analysis. In order to do technical analysis, you're going to need a charting tool. Now, there's really only one charting tool I recommend, and it is free to use. It's called TradingView. And this is what it looks like, guys, right here. So I'm going to bring it to the screen. This is what TradingView looks like. It's a platform where you can do charting on any Forex pair, stock, crypto, you name it. It has it all and it's completely free to use. So this is what we're going to use for the purpose of this course. Okay, so now you're going to need to understand how to look at a chart when using a charting tool like TradingView. Well, the first thing we're going to focus on is how to read candlesticks. Now you see these things right here on my chart, the green rectangles and the red rectangles. Now what these do is they actually represent the price history of whatever I'm looking at. So for now, I'm looking at the US dollar versus the Japanese yen, which means that I am looking at a chart that's representing the price of the US dollar versus the Japanese yen. So we can see that over the last couple weeks that the price has been going up, which means that the American dollar is actually gaining value towards the Japanese yen. Now, how do you guys read these candlesticks? Well, it's very, very simple, guys. It comes down to four things. You have the open of a candle, which is right here. That is the beginning of the rectangle, right? Then you have the close, which is the top of the rectangle for a green candlestick. And then you have the high and the low that's represented by the little wick that goes in the middle of the rectangle. So over here, if we were looking at a green candle, this is how low the price got in the specific time frame that we selected. So for example, right here, guys, we can clearly see that we are on the 1 hour time frame. This means that every single one of these candlesticks, these little rectangles that are green and red, represent 1 hour of price action. Now, the only difference between a green and red candle is that the open and the close have been switched. So a green candle is when the price goes up and a red candle is when the price is going down. So for example, right here, we can see that it opened very high and then it closed lower than it opened, which makes it a red candle. This is very important. And this is how you know if something is going up or going down in the market when looking at the chart. So if we are looking at this chart right now, again, the USD Japanese yen, we can see that we had a lot of green candles in this specific time frame. So we have 1 hour, 2, 3, 4, 5, 6, 7. So in 7 hours, the price went up considerably high, right? And we had a lot of upwards momentum. And you can see that because it was just green candles. And then you started getting some red candles over here. And you can see that the price started stagnating around that area. So it's very simple to read candlesticks. It all just comes down to looking at the close, the open, the low, and the high. All right, guys. So now that we understand candlesticks, what we want to do now is we want to talk about trends and trend lines. So first thing we need to understand when it comes to trading Forex is we need to understand how to look at a chart and determine what type of trend it is in. So we have 3 different types of trends. Right here, we have an uptrend, a downtrend, and then we have a sideways market, which I'll show you a little bit later on. So what an uptrend looks like is very simple, guys. It looks like it's going higher and higher, right? It's making higher highs. So over here, these highs are getting higher every single time, and the lows of the chart are getting higher every single time. This makes it so we are in an uptrend. Let me show you guys an example on an actual chart real quick. So if I were to go here and just bring my chart back into the screen so you guys can see it. So it makes it a little bigger for you guys. So we can see very clearly right here, guys, that in this specific area, we have a low right here, and this low got higher and higher and higher, guys. So right now, currently, we are in an uptrend. We can also see this because the highs of the chart are also getting higher and higher every single time. You see this, guys? This determines that we are in an uptrend right now. Now, if we want to know if we're in a downtrend, we simply just want to look for the opposite of this. We want to see the chart getting lower and lower. So for example, if I were to remove all these little lines we just added, we can see that in this area right here, right? Let me just turn off the algo real quick. We can see in this area right here, guys, we have the chart getting lower in this area. You see how the higher lows are coming, and then you have lower lows right here. So at this specific moment in time, we were in a downtrend until we got a higher high up here, then started an uptrend after that. So it's very important that you guys are able to look at the chart, look for these higher highs and higher lows, and just see exactly what's happening on the chart and determine whether you're in an uptrend or in a downtrend. Because when it comes to trading, you should only really be buying in uptrends, and you should only be shorting the market in a downtrend. This is very important that you guys are able to look at the chart and understand this. Now, there are tools that can help you see this a little more clearly than just drawing circles on your chart like this. Let me show you exactly what I mean by that. Okay, so if we go back to the slideshow, now what we're going to talk about is trend lines. Trend lines are basically lines that are going to help us understand if the market is going upwards or downwards, and it's very easy to apply to your chart. Let me show you guys exactly how to do that right here. So if we go back to trading view, right here, guys, we have it on our chart. Now what we want to do here is simply just going to go up here in the left toolbar. We're going to click this little arrow, and we're going to make sure that we select where it says trend line. Once we have that selected, all you want to do is you simply want to draw the trend line from a low to a high, something like this. And now you can clearly see that we are in an uptrend. We can do the same thing over here where we go like that, and we can clearly see that we are in a downtrend. Just by drawing this little trend line, it makes things a lot more visible on the chart for us, and for us to understand a lot easier when something is just hitting in the face instead of having to really look and analyze. That's why we have these lines. They really help out with our analysis when it comes to trading Forex. So going down back to this picture right here, we're just going to make sure you guys understand exactly what these trends are. So over here, we can see that we have a trend line going upwards. which was indicating an uptrend. Then it switched to a little bit of a downtrend because the lows started getting lower and the highs started getting lower as well, right? Then we had what we call a sideways trend. This is what I talked about earlier when the market can go sideways. This is when the chart isn't going up higher than it was previously and isn't going lower than it was previously. So it really just creating a type of like channel, right? Where it's like this and the price is going in between those two lines. Now, whenever this happens, if you're trading Forex, if you're a beginner trader and you just started learning about trading Forex, I'd recommend you never trade during a sideways trend because it really gets really hard to understand exactly when to buy and sell in that scenario right there. So moving on, we can see again, we have an uptrend right here indicated by this blue line and then a very strong downwards trend right there. So if you guys understand this, let's keep going. If you guys don't, just roll back into that segment of the course and just watch that again until you understand exactly what I mean by trends and trend lines. Okay, so now let's talk about trend channels. What's the difference between a trend line and a trend channel? A trend channel is when you close the candles with two lines, and that makes a channel. Now, the reason why people would want to use channels is very simple. It's because of support and resistance. And if you guys don't know what that is, let me explain real quick right now. So if we were looking at the chart and we have a trend line going upwards, we can kind of estimate that the price is going to go back down into that trend line, then go back up again, because that's what's been happening in the past, right? It's a pattern that we detected in the past that we're going to see if it applies to the future. So let me show you guys exactly what I mean by that. So right now we have a channel, right? We have a channel going upwards. So two trend lines, one at the bottom of the candles, one at the top of the candles. And we see that every single time that the price came and touched this trend line down here, the price started going back up again. Now, assuming that it's going to happen again because that's what happened in the past, this is called support and resistance. So if the price came back down into that area, which it did right here, then what we can do is simply just place a buy signal. So we're going to pretend to take a buy signal right here. We're going to place a buy order. So we'd have our take profit somewhere up here, close to the last candles, the last high that we gave, and our take profit, our stop loss, just a little bit below this trend line, right? Something like this. And then what we want to do here is simply just run the trade and we'll see exactly what happened. Now, as you can see, it went back up and it hit that top of that trend line. So this would have been a winning trade simply just by looking at what happened in the past and applying it to the present, guys. It's very, very easy to understand. And this is exactly why people are using trend channels, because you can use these as support and resistance to determine when to buy and sell in the market. But there's also more things that you guys need to look at when it comes to trading, buying and selling based off support and resistance. This is a very oversimplified analysis of what this is right here. So let's talk more about support and resistance just to make sure you guys really understand the concept of support and resistance, because it is actually really important when it comes to trading Forex, and we're just going to make sure that you understand it. So over here, guys, what we see very clearly on this chart, we have a very good support at the bottom. Support means below the candles, and we have a resistance at the top. So what we can see here very clearly that when the candles came back down and touched this support, it went back up, right? So if we were here at this given time, we could assume that yes, that could happen again because it happened in the past. So we're trying to pick up on a pattern, right? And surely enough, the price came back down to that area, then started going back up again. That's exactly how support and resistance works. So if I want to go back into a chart right here and show you guys an example, I'm just going to bring up TradingView again here. And we're going to see here, for example, guys, right here in this area, we had a very good support. We can see that the price came back down, touched this area, went back up, and then came back down and touched this area again. Now, what we can do is we can assume that the price is going to go back up because the last time it touched this area, the price went up. So we're trying to look for a pattern again, right? This is support and resistance. And what happened? The price went back up over here. Now, over here, we can again very clearly see, guys, that when the price touched this resistance, the price came back down. So what we can do here is we can start analyzing exactly what's going to happen. So we know that the price, the last time it touched this high, it came back down. So what we'll do, we're going to predict the market going down. And surely enough, the market ends up going back down again before going back up again because it touched that support. So support resistance is really important when it comes to trading Forex. You have to understand how to look at it on a chart. Okay, so now let's talk about chart patterns. Now we already talked a bit about it briefly with the support and resistance, where we're trying to analyze what happened in the past and apply it to the present. There are specific patterns in Forex that you guys can use and see that's going to help you with your trading and determine when to buy and sell in the market. So let me show you guys a pattern that's very popular amongst traders, and they are called the double top and double bottom pattern. So it's really very easy, guys. What you want to see with these little patterns is you want the price to come back down and kind of form a W right here. And then once you see that it formed a little bit of a W, then what you want to do is you want to enter the trade once it breaks the neckline. So right here, as you can see, the neckline is the previous high. You want to enter the trade once it breaks that previous high and starts going at the top again. That's one of the patterns that we want to look for. It's called the double bottom. And then the opposite of that is just a double top. You want to look for an M instead of a W. Let me show you guys some examples on a chart of what these actually look like. Okay, so here's an example of a double top right here, guys. So we see that the price was going up, right? And it created a top right here. So we're going to go ahead and draw this for you so you guys can clearly see it with me. So we have a top right here, guys, right? The price then went back down and then back up and created another top. Now what happened here is that this top did not break the last one, right? So we have what you see, an M forming, right? You guys see that little M forming right now? Now what we want to do here is we simply want to enter a short in the market. So we're going to predict a sell when it breaks the neckline. The neckline is right here, is the last low, right? So what we want to do is we want to enter a trade once it breaks this area. So over here, for example, when the candles broke this area over here, this is when we would want to enter a trade going downwards, right? And this would have been a winning trade using this pattern. Okay, so I just showed you guys an example of a double top. Now let me show you guys an example of a double bottom that we see right here, guys, on a chart. So we're gonna go ahead and bring up TradingView again. And as we can see right here, guys, we have a little bit of a W forming. Do you guys see that? Right? Very, very easy to see. Now, so we have the double bottoms right here. So that's one bottom, another bottom right there. And then we have the neckline right here, guys. And we want to do is want to simply just wait until the price breaks this neckline. And then we want to enter a trade. And we can see that the price went up all the way up this high, guys. So that's exactly how you guys can use this trading strategy right here to see exactly when you should buy and sell using these specific patterns. And there's multiple other patterns that we're going to talk about. So the next one we're going to talk about, guys, is ascending and descending triangles. Now let me explain to you guys exactly what these patterns are so you guys can understand. An ascending triangle is very easy, guys. What you want to look for is you want to look for the top, right? The highs of the top are not getting higher, but the lows are getting higher every single time. So it's creating a triangle, an ascending triangle, guys. And then what you want to do is you simply just want to wait until the price breaks above the tops before entering a trade. Let me show you guys an example of that on the chart. So here's an example of an ascending triangle right here, guys. We see that the top here had a hard time breaking the last top, so it stayed flat. And we see that the lows are getting higher every single time. So we simply just want to wait until the price breaks this line that we set from the resistance from these little two tops here that we talked about earlier. And we simply just take the trade once it breaks that, and we can see that the price went back up after that. Very, very easy. Now let me show you guys an example of a descending triangle again, so you guys just understand exactly what to look for on a chart. Okay, so here's an example of a descending triangle. So what we see here is very simple. We have the lows that weren't getting lower and lower, right? They were staying around the same level, and the highs were getting lower and lower every single time, until eventually a candle broke past this support right here formed by these lows, and then the price just completely tanked going downwards. That's what you call a descending triangle, and that's exactly how you would trade a descending triangle. It's extremely easy. Now let's move on to different patterns that we have when trading Forex. So now let's talk about symmetrical triangles, and honestly they're pretty much the exact same as the ascending and descending triangles, except the only difference really is that the triangle itself is symmetrical, meaning that both sides are of equal length and equal angle, guys. So they're pretty much the exact same thing. We're just looking for triangles at this point, guys. So I'm not going to go to the charts and show you guys exactly how to find it because it's the same as these ones. You just want to look for these patterns. Next, guys, is wedges. Again, really the same concept as the symmetrical triangles and the ascending and descending triangles, except now we're looking for a wedge to form when looking at the chart. So if you guys want, you can take a screenshot of these little patterns that we're showing you guys and simply just go into TradingView and take your time and practice looking for them and seeing exactly how they react once you find them on your chart. Very easy, guys. Next, guys, what I want to talk about is indicators. Now, indicators are tools that you use on TradingView to make trading a lot easier and just a lot faster in general, so you guys can easily pick up and go and start trading. And one indicator I want to focus on for this course is the Elite Algo indicator, because it really does everything for you and there's no need to look at other indicators when using this one right here. All right, so let's talk about the Elite Algo indicator and how it can help you trade Forex and make trading a lot easier. So the first thing I want to show you guys is all the tools that it gives you when it comes to trading. And the first one I want to start off with is the buy and sell signals that it gives you on your chart. So if I were to move my chart back into the course here, we can see very clearly, guys, that this indicator, Elite Algo version 21, actually plots these buy and sell signals on the chart for you guys in real time. So this tells you when to buy and sell and makes trading a lot easier. Now there's two different modes for these buy and sell signals. That's actually very important and you need to keep in mind of. So over here, if we go into the Elite Algo settings, we click this little gear icon up here. We're gonna see under strategy right now it's currently set to normal. So under the normal strategy, you're not supposed to follow these signals blindly, right? So you're supposed to have at least 2 or 3 other confluences that tell you that the direction of the chart is going to go up or down, and then you want to use these buy and sell signals as the confirmation for your analysis, right? So if you already think the price of what we're looking at here, Great British Pound US dollar, is going to go down, then you would wait for a sell signal and you take that signal because you already have an analysis knowing that's going to go down based off the patterns that we previously showed you, or support resistance or trend lines, etc., guys, right? Now, if you guys want to use the other mode right here, so if you go back into settings, on the strategy, just want to click this and go confirmed. Now what this does, guys, is now Elite Algo is acting as a signal giver. So now you can blindly follow every single signal that Elite Algo gives you and just take that trade. So for example, right here, guys, Elite Algo told us to take a short position right here in the market. And then it told us to take profit around right here where it says TP1 and TP1 again. So this is where you guys want to take profit for those trades. And these signals that you're going to get from Elite Algo are extremely accurate. Just check this out, guys. So we have 2 winning short signals right here. And if we keep going, we can scroll up and see all the past signals that Elite Algo would have recommended to you. So over here, it would give you a buy signal. The price didn't go up very, very high, but it told you to take profit right here before the price started going down again, right? So this would have been a profitable trade. Same thing here. We have a sell signal. The price went down after it. And you can see how highly accurate this indicator is when it comes to trading. But it does also a lot more than just give you buy and sell signals on your chart, right? It's an all-purpose indicator. And let me show you guys exactly what I mean by that. So over here, we can clearly see that it gave us our take profit levels, but we haven't showed you how to use the stop loss levels for this yet. So over here, what you guys want to do is very simple. You just want to go back into the settings and you want to go down over here to where it says enable take profit and stop loss areas. Click that. Then what's going to happen is that it's going to give you your stop loss and take profit level recommendations, just like this, guys, on your chart, making it super simple to know exactly where to place your stop loss and your take profit. And if you guys don't know what stop loss is yet, we're going to talk about it a little later on in the course, because it actually is a very important subject when it comes to trading Forex, guys. So next up, we want to talk about for other features that it does for you. We can see that it says here it does automatic trend lines. So remember how previously in the course we talked about trend lines and how important it is to realize if you're in an uptrend or a downtrend? Well, using this indicator, it actually does that for you. So if you were to go down here to where it says auto trend lines, want to click that. I'm just going to turn off the stop loss for now. Press OK. You're going to see that it's going to draw these trend lines on the chart for you. So now you automatically know, based off these trend lines, that the market is currently in a downtrend, guys, right? Makes trading, again, super easy. And it does more than just trend lines. It also gives you your support and resistance levels like this right here. So remember previously we talked about support resistance and how important that was. Well, this indicator does that for you automatically as well, guys. Check this out. Press OK. These are support resistance levels that are gonna pop up on your chart. These little green lines, let's make it a dark chart just so you can see the green lines better. These little green lines here indicate support, and these red lines indicate major areas of resistance, guys. So these are key levels that the price can react to, right? Mixed trading, again, extremely easy, all-in-one indicator that gives you all the tools that you need to be a successful trader. And then one more thing I just want to briefly touch on is you go to settings right here, you want to enable the dashboard. Now what this does, guys, is it gives you information on what's happening with the chart to better help you understand when something is bullish or bearish. So for example, here it tells you every single time frame that matters and which time frames are bullish and which time frames are currently bearish. Again, just makes trading a lot easier. And then using this indicator, you can use 20 different types of strategies that can help you when you're trading with Forex. And we have videos for these all over our YouTube channel. So if you guys are done with this course, go ahead and check those out as well. So if you guys want to use these types of indicators, like I just showed you with Elite Algo, then what you guys want to do in order to sign up for this is that you have to go on this website right here, myelitesignals.com, and simply just sign up to use this indicator. It is not going to be available publicly on TradingView because it is a private indicator, but anybody can use it. You just have to go to myelitesignals.com and simply sign up, and you guys can get started with this indicator whenever you guys start trading. Okay, so that's pretty much it for technical analysis. Now let's talk about the other type of analysis, which is the fundamental analysis and everything that covers. So as you can see right here on the screen, guys, multiple different examples of what fundamental analysis is: GDP, employment, imports, exports, trades, policies, war. All these type of things right here can impact how a Forex pair does in the market. So you guys can use fundamental analysis to also make decisions in the markets when you're trading. Now, one thing that you guys should always look to do is always use an economic calendar like the ones we have right here. Now, these links, I'm gonna leave them down in the description down below, but let me show you guys exactly how you guys can use these economic calendars to your benefit when you're trading Forex. So for example, right now, this is one of my favorite ones, is the one from my FX book. We're just gonna go ahead and click it. And we can see right here, just close this little ad here. It's gonna give us the economic calendar that's happening right now. So as we can see, we have a very high impact today on the Australian dollar, which means that we should not be trading the Australian dollar today, guys. So before you place any trades, when you're trading Forex, you want to make sure that you're looking at the economic calendar and that there's no high impact news that's happening with that specific currency, guys, right? And this will give you what's happening every single day. You just go on this website, you can check it, and you can see if you're looking to place a trade on USD CAD, for example. You just want to make sure that there's no high impact news for USD CAD around the time that you're looking to trade that currency pair. It's very simple to use the economic calendar, and I suggest you guys use it every single time you guys trade. Okay, so now let's talk about trading platforms. And these are the trading platforms that you're going to use in order to trade Forex and make money trading Forex. So there's two different platforms you guys can use. Actually, there's multiple, but we're only going to cover two in this course. And the first one I want to talk about, guys, is obviously TradingView. This is the one we've been using the chart this whole time. Now you can actually place your trades inside TradingView, which makes things really, really simple if you're using the PC version, right? If you're on mobile, then you cannot place trades inside the TradingView app. So if you're trading on your computer, then I would recommend using the TradingView website to place your trades. Now, the way you do that is you want to connect it to a broker. So we talked about earlier how you need to sign up for a broker. There's a couple brokers that actually support the TradingView platform in terms of placing trades through that platform. So the ones I would recommend for that is Owanda and Forex.com. These are ones that you guys can use to trade Forex on TradingView. Now, if you guys want to use MT4, which is a more mobile app friendly version. So I have an app on my phone called MT4, which I'm going to show you guys in a second. And that's actually how I place my trades online. So that way, if I'm out and about and I have a trade open, I can always take a look at it, see how it's doing, and I can close the trade if I want to close it or whatever needs to be done, guys. So let me show you guys exactly how you guys can use the MT4 app, which makes it very, very simple. Okay, so these are the MT4 apps. You simply just want to go to your app store
and you can either download MT4 or MT5. They're almost identical, just some have different features than the others, and it really depends on which one your broker supports. So when you go to sign up for your broker account, they're going to tell you which platform they use, either number 4 or number 5, and you're simply just going to download the one that you want to use. Now, the way you use it is very, very simple, guys. So this is how it looks like. What you want to do, the first thing you want to do is you want to go to settings, and then you want to just click on new account. And then over here, what you want to do is you just want to log in to the account that you signed up with your broker. So for example, if you sign up with Owanda, then all you want to do here is simply just go type in Owanda, and then you would select the one that they want you to use. So if they wanted to use Owanda V20 Live 1, then you just enter your login and password, and then you can start trading through your broker's account using your iPhone or Android phone and using MT4, guys. Now, once you have that all set up, right now I'm just using a random demo account. It's going to give you your balance up here with your equity, your margin, everything that you need to know. And if you click on charts, you're going to have a little bit of a chart that's going on, but we're not really going to use this chart here. Instead, we're going to be using TradingView, the one I showed you earlier, where you can also download the TradingView app on your phone, because the charting on TradingView is just a million times better than what it is on MT4. So we're only really using MT4 to place our trades, which is right here, guys. So if you guys want to use, let's say for example, a trade on Euro USD, you simply just click it, you're going to click trade, and then you're going to enter your stop loss, your take profit, you're going to set you're going to keep the deviations to not set. It's going to be whatever it is. Then if you're buying or selling, you just click one of these numbers. And over here, this is where you can select your lot size to see exactly how much money you want to allocate into that trade, guys. It's very simple. So for example, if I want to just open up a random trade here of Euro USD with a 0.10 lot size, and I'm placing a buy order, I'll simply just have it all set up the way I want it right now. Press buy. Sorry, make sure that these are not set for now because I don't have anything set up for it. Press buy, and that's it. You've entered your first position, guys. Now you're always going to start off with a negative. That's because your broker actually takes a little bit of money from you. It's called the spread, but it shouldn't be too bad, and you should easily be able to make money as soon as the pair starts moving the way that you actually wanted it to move, guys. It's very, very simple. Now, if you want to close a trade on MT4, all you got to do here is simply just want to click on that, hold it, and hit close. Then over here, you can select how much of your position you want to close, right? So if I want to close half of it, then I would only close 0.05 lot size, then press close right here. And that just closed half my position. Or if I want to close it all, I just want to do the same thing again, but make sure that I close the rest of my position, which says up here 0.05 is how much I have. So that's how much I want to close. And that's it. You closed out of your trade. So if you're in profit and it hits your take profit level, you want to close. If you hit your stop loss, then you want to close then. Now, you guys don't know what stop loss is yet. I'm going to show you guys exactly what that is in just a second. But that's how easy it is to use this app. And there's a bunch of tutorials online that teach you exactly how to use MT4 and MT5 with your broker, guys. Okay, so obviously you guys probably know this already. Forex is not risk-free, guys. And if you guys think it's risk-free, then you guys should not even trade Forex because it obviously involves this risk. But as you know, anything good in life is always going to have some risk to it. So that's why we need to understand exactly how to define risk and how to make it work for us, right? So there's 4 different types of risk out there. There's risk acceptance, risk avoidance, risk limitation, and risk transference. Now let me show you guys exactly what each one of these mean so you can better understand how to define risk. Okay, so the first one I want to talk about is risk acceptance. And an example of that is very simple, guys. It's when you place a trade without using a stop loss and you understand that you can lose your entire account in just one trade. So let's say your $1,000 account can plummet all the way down to 0. That is risk acceptance. Now, we don't do this in Forex because we are always going to be using risk management, aka using stop losses and position sizing, so we know exactly how much to risk in every single trade. So I'm gonna teach you guys how to do that in the next lesson. But for now, let's keep going. The next type of risk is risk avoidance. For example, the risk is an activity too high, so you don't partake in it. So if your friend is going rock climbing without a harness and he tells you to come and you say no, that means there's no chance that you're going to fall while trying to rock climb, right? So you're not partaking in that risk. That is risk avoidance. Next, guys, is risk limitation. Now, this one is the one we're going to be using every single time we trade Forex. And that's because we're always going to be using a stop loss. So we're going to know exactly how much we're willing to risk in every single trade that we take. So let's say, for example, our account size is $1,000, but we only want to risk $5 from that account size every single time we take a trade. Well, we can do that by using position size tools that I'm going to show you guys in the next slide to make it so you guys only lose $5 every single time you place a trade. And that is the one that we are going to be using almost every single time. So we're always going to be using risk limitation when it comes to trading Forex. And the last one, guys, risk transference. You transfer the risk to somebody else. So for example, if your friend is going rock climbing, again, you just wait in the car, right? The risk does not apply to you. It only applies to your friend. Next up, guys, let's talk about stop losses. Stop losses. This is what you'll always use to limit your risk. It will prevent you from blowing up your account. So for example, if you have $10,000 and you only take $200 to the casino, you're only limiting your loss and not your own account. So you're only willing to lose $200 because you don't have the rest of your money with you. That's the same thing when you talk about Forex. So for example, right here on this chart, let's say, for example, we enter a buy position right here at the circled position. We set our stop loss slightly below it, and then we have our take profits up here, which means that if the price were to fall and behind that red line that we set our stop loss to, we would only lose the specific amount that we risk in the first place. We'd never lose more than that. And that's exactly why we always recommend using a stop loss when it comes to trading. Now, you're going to understand this a little bit better when I do the live trading in this course. So I'm going to take 3 or 4 live trades just to show you guys exactly how I trade so you guys can mimic it. And you guys will understand stop losses a lot better when I do that. Next, guys, protecting your account. So whenever you're trading, it's very important that you're only risking 1 to 2% of your account for every single trade that you take. We do not want to be gambling all our account on 1 or 2 trades. So this is not like a get rich quick type of thing. So if you have a $1,000 account, for example, you don't want to be risking $500 every single time you trade, because the reality is when it comes to trading Forex is that you could lose 5-10 trades in a row and then win your next 20, right? So we want to make sure that we're able to survive 5 or 10 losses. So in order to actually trade the next 20 and make sure that we get the profits from those trades. So that's why we make sure that we're only risking 1 to 2% and we're not gambling out here, guys, right? This is not a get rich quick scheme. We're trying to make money over the long run, over a long course of trades, right? So we're looking to place, let's say 50 to 100 trades every single month if we're scalping. And that's how we're going to make money with those 50 to 100 trades. We're not looking to make money with just 1 or 2 trades. That's called gambling, guys. So now you're probably asking, okay, so how do I use position sizing so I can understand exactly how much I'm willing to lose and what lot size I should be trading when I'm trading a specific Forex pair? Let me show you guys exactly how I do that. So for example, right here, we can use these different types of calculators online. So we have my favorite one, which is my FX book. We're going to click on that. And it's going to look something like this, guys. Just a little ad pop up. So it's going to ask you here, which currency pair are you using? So let's say, for example, we're trading the Euro USD. It's going to ask you the type of currency that's in your account. We're trading USD for now. Your account size. So let's say my account size is $1,000. And I'm only willing to risk 2% of my account, right? So risk ratio, 2%. Then it's going to ask you for your stop loss in pips. Let me show you guys exactly how you guys can get that. So let's say, for example, right here, we were looking to place a buy on this smart signal right here, right? And we set our stop loss right here, okay? Using the position size tool over here. So we click this left toolbar, we got the long position because we're placing a buy signal, okay? And our take profit will be somewhere at the last resistance, so somewhere like that for our first take profit, okay? Do you see where it says 39.7 right here, guys? Right in that area? That is how many pips your stop loss is. So that's what we want to add there in that calculator. So going back to the calculator, we want to add 39, and I believe it was 39.7. Yeah, 39.7. So that'd be the amount stop loss that we want to use. Then we just hit calculate, and now it's going to tell us, okay, 2% of $1,000 is 20 bucks. So we're only willing to lose 20 bucks in this trade. And in order to do that trade, we need to have a sizing of 0.05 lots when we trade. So very, very simple how to use a position size calculator. Now I'm going to leave these calculators down at the bottom in the description, both of them, and you guys can pick the one that you like best and use that in your trades. Okay, so now let's talk about the batting average and win-loss ratios. So batting average, this is the percentage of profitable trades that you took. So for example, if you took 100 trades, right, and you won 70 of these 100 trades and you lost 30 of these 100 trades, that means your batting average is 70%. Sorry. So it's very easy to calculate, guys. You just want to take your wins, divide that by your losses, equals 0.70, which means 70%. Very, very simple math equation, guys, that you guys can follow to calculate your batting average. Now, when it comes to your win-loss ratio, is the average of your profitable trades divided by the average of your losing trades. So for example, for your 70 profitable trades, you made, let's just say $3,800. And from the 30 losing trades that you did, you lost $900. You take these numbers, use this equation right here, and you'll end up with 1.81, which means that you made, for every $100 that you lose, you actually made $181. This is an incredibly good ratio. So for example, imagine somebody taking $100 from you, but every single time he took $100, he gave you $181, right? You would do that every single day, every single minute, every single hour of that day, right? Very, very simple how to calculate this. So you guys, if you guys want, make sure you take a screenshot of this so you guys can understand exactly how to use these equations when you're calculating your batting average and your win-loss ratios. Okay, so now that we understand the batting average and win-loss ratios, next, what we want to talk about is a trading journal. You should always keep a trading journal. And if you guys don't know what that is, it's basically just a journal that you're going to write down all your wins, all your losses, everything that happens when you're trading Forex. This will help you study the market and help you understand why you're losing trades so you can correct those mistakes and turn them into winning trades the next time. Now, I'm going to include a completely free trading journal in the description down below. It looks like this, guys. It's very simple to use. All you want to do here is, this is all the information, and you just enter this in your journal right here. So for example, if you're placing a trade, you're going to write down here, when did you place that trade? When did you close it? Which pair was it that you were trading, etc. Just follow every single one of these and say, did you win? Did you lose? How much was your profit? Etc. Right? And it will all calculate everything for you right here, which makes it extremely easy to use. And I'm giving this completely for free. So go ahead, check that out. Click the link in the description and just get familiar with this trading journal. If you guys think it's too complicated, you guys can always make your own. But this is the one I'm giving you guys in this course.
All right, guys. So now that we understand exactly what Forex is, how to trade it, we understand technical analysis, fundamental and technical. We understand pretty much everything about Forex. Now it's just time to take what we've learned in the course and put it into practice, guys. So what we're going to do is we're going to do some live trading on TradingView. And just to make this very simple for the video, we're going to do a paper trading account on TradingView, which I recommend that you guys also do until you get comfortable, until you can make money with the demo account before using your real money when trading Forex. So what we're going to do here is we're going to go here to the bottom, click where it says paper trading, and we're simply just going to make a paper trading account. Now, I've already made one. We have a balance of $1,000. The reason why you guys should use a small balance for your demo is because you want to mimic what you would do in real life. So for example, in real life, if you're going to have $1,000 to trade with, then you're going to want to use a $1,000 demo so you guys can get used to it. It doesn't make sense to do a $100,000 demo when you're going to be trading with 300 bucks per se, right? That doesn't make sense. So make a demo account based on how much money you're going to be trading in real life. The way you do that is very simple. You simply just want to go over here to where it says paper trading. You can go reset paper trading account. and simply just type in the amount of money that you guys want to be trading with, and then press reset. Okay, so for the strategy I'm going to be using with Elite Algo during this live trading, what we're going to do is we're going to do a very, very simple strategy that I do with Elite Algo and a lot of people do, is we simply just want to take the smart sell signals when they match the trend cloud color. Very easy, guys, and we're going to be trading on the 1 hour time frame or any other time frame that I find setups in. So right now we can see that it gave us a smart sell signal, right? And the price, although we missed the signal by a little bit, the price is still very close to the entry. So it is a little bit riskier, but it's okay to take this trade. So what we're going to do is we're going to go ahead and take this trade right here. So the first thing we want to do, guys, is we want to take our position size tool right here, and we want to short the market, right? Because we're following a smart sell. So we're going to short the market here. We're going to click exactly where the price is. We're going to set our stop loss, right, to where the algo recommends to have a stop loss. And we're going to set our take profit to where the algo recommends to have your first take profit. So that's going to be your take profit 1, and that's going to be your take profit 2. So we'll set it at the second one, but we'll keep an eye on and make sure that we close some of the trade after it hits the first take profit right here. So once we have this position size tool all set up and it's ready to go, then we want to click on this button right here where it says sell market. It's going to bring up this little box, and we're just going to enter the information that we want to use here. So we're going to enter our take profit and our stop loss. So in pips, the amount of pips our stop loss is right now is 66 pips. So over here, I'm going to type 66. And we can see that our second take profit is going to be 98 pips. So we're going to type in 98 over here. Now, where we say risk, remember, we only want to risk 1 to 3% of our portfolio every single time we take a trade. That way, if we lose a trade, we still have money to make it back in the future, right? We can make sure that we can lose up to 10 trades in a row, but still have money to keep trading and recoup those losses and make them into profits, right? So we're going to do 2% risk right here. Very simple. I'm going to hit sell. Now we have our order executed on TradingView with the paper money account, and it's going to look very, very simple. Now, in the meantime, I'm going to go ahead and look for more trades that we can take so you guys show you guys more examples. Okay, so here's one chart that looks very interesting to me, and I'll tell you guys exactly why it looks interesting to me here. So as we can see, guys, we have a red trend cloud going downwards, which indicates that overall the market is in a bearish sentiment, right? We're looking at very bearish conditions. We can see that we had a buy signal and the price rallied up to a very strong resistance level around this area. So as you guys can see right here in this area, this used to be a very strong area of support, right? Before the price broke it down, this used to be a very strong area of support. And now that the price has broken by it, this very strong area of support has become a very strong area of resistance. And as you can see, the price rejected this area right here, right? We saw the price came up here, rejected this area, and now seems to be coming back down. So what I'm predicting is going to happen here is that within the next couple of hours or so, because we are on the 1 hour chart, we are going to get a sell signal on this chart right here. And once we get that sell signal, we're probably going to take it and try see another short down here to try target previous lows or even higher than that. So that's what we're going to look at right here on this trade. So just like the last trade that we just looked at, where we were looking at the price right here on Euro Swiss franc. Remember, we said that we're looking for a sell signal right here. We can also see that on USD's franc, right? We have the same similar setup right here, guys. We have a bearish trend cloud, right? Showing us that it's very bearish momentum. The price down here went down and came up and rallied all the way up. But we see that right now it's rejecting a very strong resistance, right? We have a resistance here at the top set by these candles right here. And we can see it's having a hard time breaking this little area. So what we're looking here is we're looking to see if we're going to get another sell signal. And if we get a sell signal around this area, then what we'll do is go ahead and target down that one to the downside. Okay, so for you guys, it's been like 1 second, but for me, it's been like almost 2 days. So let me show you guys exactly how the trades went and see overall what we did with the account, guys. So the first one I want to show you guys is the USD Swiss franc, right? We said we were waiting for a sell signal to appear, which never came. So we did not enter any trades on this chart. So unfortunately, we never looked for a play on this because we never got a sell signal. Now, on this one, one of the trades we took right here on British pound Swiss franc, as you can see where we entered right here, the price went back up, almost hit our stop loss, but was stopped because there's a bunch of resistance up here, and came back down and hit our take profit, making us a very, very nice win on this trade. And we made over, I believe, $29 on one trade on this pair right here. Next, guys, is the other one, the last one we got into, which is this trade right here on Euro Swiss franc. And as you can see, it came down, almost hit take profit, and it's probably going to come back down and hit it very soon. But because it is Friday and the market's about to close in a few hours, I don't want to be trading over the weekend. So what I'm going to do is I'm probably going to close this trade right now and just collect the $11 profit that we have done already. So that's done. We closed that trade. Overall on the account, guys, in just 2 trades, $1,000 account, we made $40. So making $40 on a $1,000 account may not seem like a lot at first, but you gotta remember, guys, that's a 4% gain in about a day and a half, taking only 2 trades. So if you guys took more trades, you guys can get way more profit. If you guys had more time, you guys can get way more profit from your account, right? You can easily grow a $1,000 account or a $20 account or a $100 account and easily double it and double it and double it and keep on doing that until you have a lot of money you can trade with. And when you have a lot of money you can trade with, you can make even more money when you're trading. So it makes trading extremely lucrative if you know exactly what you're doing, guys.
So thanks for watching the course, guys. I hope you guys learned how to trade Forex and learned at least the basics of trading Forex. Now all there's left to do is for you guys to actually go out there in the markets and trade and practice until you become a pro trader. Now this video itself was actually created a few months back. So in the meantime, from creating this video, we've actually made Elite Algo, our indicator, even better, guys. We've created an indicator that gives you insane signals, as you guys can see on my chart. And we also added this new indicator down here, this Oscillator Pro version that does a lot of things. So if you guys want to learn more about that indicator, then head over to our website right here, elitesignals.com, guys. And on this website is where you can actually sign up to start using this indicator when you're trading Forex. Not only that, guys, we also have a section here called strategies. This is a bunch of areas where I created at least 5 videos that you guys can watch that show you different strategies that you can use with this indicator so you guys can maximize your win rates in the market and be able to double your account even faster. But not only that, guys, when you actually sign up to use our indicator, you also get access to our Discord. To join our Discord, all you gotta do is click this button up here, and then once you click that, you're gonna be invited to join our Discord. Once you're actually in our Discord, guys, you can see in our Discord we have a bunch of chat rooms that you guys can join and make friends and share trading ideas for gold, Forex, crypto, stocks, you pretty much name it. But not only that, we also have over 20 different analysts giving you guys their trades and their ideas every single day. So you can go into our Forex signals area and then you can click on any one of our analysts where they're providing signals for you. So for example, if we click on Cesar's channel right here, he is one of our analysts for Forex. And as you can see, he's giving us trade ideas. So for example, he told us to sell AUD JPY, gave us our stop loss, our take profit targets, and told us exactly how much we should be risking. And we can see that this trade that he took right here made over 35 pips. So this is a trade that all our members were able to take alongside with him. So you guys can take these trades and make some money while you're learning to trade yourself and while you're practicing yourself in the markets. So all that is included in just one membership, guys, the Elite Algo Indicators and our community with our signals. So if you guys want to sign up for that, again, all you guys gotta do is go on our website and simply sign up. If you guys like this video, please make sure you hit that like button on YouTube and subscribe if you're seeing on YouTube. If you're seeing on our website, then hope you guys have a great day. Goodbye.